and it's a product which is an insurance product against natural disasters. So it started really around 2006, 2005, and there was a need of governments, which was identified by the bank, a need to insure against natural disasters. Now, natural disasters can have large impacts and devastating impacts on economies, on governments. For instance, an earthquake in Turkey can take away 5% of GDP. These macro shocks can have macroeconomic effects and can really hamper the development. So we started to simulate, we started to work at Treasury with insurance experts, and we simulated what would have been an insurance company, a global insurance company offering insurance to all countries. And we presented to senior management, very interested, please work on that, this is very good, let's make a move there, let's make a difference. At the same time, the bank could not become an insurance company, the bank could not really use its balance sheet to move from being a lender to being an insurer. At the same time, we used a catastrophe swap to transfer the risk of a mutual insurance company we had established in the Caribbean to the market in the form of a cat swap. And this is where we had the idea, why not offer governments insurance in the form of a cat bond? And starting there, around 2007, 2008, we contacted a group of 7-8 countries, Mexico, Chile, Romania, Turkey, others, and we told them, listen, we are going to form a working group with you, and we are going to make a first cat bond happen, and we are going to create a platform for all other governments. From this initial group of 7-8 countries, we finally retained 2, Mexico, Chile, and then the financial crisis happened, and in the end Mexico was the only one left. But we could, with Mexico, do a first cat bond issue called the Multicat 2009, Insurance Mexico against earthquake, hurricanes in several regions, and more importantly, we could create a platform, an insurance platform, which can be reused by other governments. So the Multicat was a successful placement, a successful operation, and now the bank is known by markets for reinsurance and by governments for having this capacity and this capability to deliver insurance. The opportunity was huge. It was to open access to insurance to emerging governments in the absence of any access. The constraint was really a knowledge gap. There was a problem of access to a market which was complex. Complex because of the technology used, complex because of the way the players were operating, and the challenge for the bank was really to break open and to make this access possible. But the second constraint was really to breach a sort of a trust, confidence, trust with the country, so that we could actually work with them hand in hand and take them through a sort of travel, initiatic travel together to make them take this market, adopt it and use it. The decision process for this project has been relatively straightforward. We had a meeting, we presented something and they said, fine, very interesting, move ahead. There was a second step where we said, listen, given the way the bank is working now, we recommend that Treasury is given the mandate to approach countries with a cat bond. So the lesson learned in that case was that the mandate to explore this innovation was given very rapidly. In terms of outcome for this project, the first outcome is of course for emerging countries. They now have an instrument which is ready for use. They can really replicate the first issue we've done with Mexico. For the bank, I think again, a lot of lessons learned in how to move to a new territory. Also, reputation established in markets, within governments, that the bank could deliver on such new technology in a very reliable way. within Treasury, there was a drive for innovation. I mean, there was a sort of message: you have been hired by the bank because of your high capacity. We expect you to bring the best practice, state-of-the-art, most innovative stuff to emerging countries at all times. So I think there was this environment that was existing. Now, on this specific problem that we answered through innovation, there was also an initiative by my own management. Ken Lay, just to give his name, was treasurer at the time and took the initiative to assemble a group formed from me and my team, a reinsurance expert. Why don't you work together and try to find an answer to the problem of natural disaster? Again, if you receive this kind of mandate and this level of trust from a manager, then it's really something that drives you through a high level. And yes, a very ambitious drive towards creating an innovative and reliable answer. Now, the third component in the whole story was the ability to, go across lines and think, okay, we have the treasury experts, they know very well capital markets, they can do a lot of things there. And we have the insurance experts who are extremely good in their domain. Why don't we have them talk together? Maybe the insurance expert by himself can deliver some form of products, but maybe it's not. They cannot create something that is that standardized, that useful. If we assemble the two, if we can connect insurance and banks and markets, maybe we can find something. And again, when we did that, we had no idea that we would do a cat bond. It was just creating a team of people with the right skills. And actually, investment banks don't innovate that much. When we call them for an innovation, they're not so happy.